Hey everyone, this is Mark from Stocks and Cash. It's March 13th, 2018. I'm here with your market update video. Going to go over my holdings and some potential trade setups for tomorrow. So today in the market, pretty tough day, at least for me. You can see that we opened up higher than the close of yesterday. We still didn't actually fill the gap, which is surprising. So the low of this candle on the first, and I'm talking about the gap between the first and the second here. The low of this candle was 280.68. Our high today was 280.41. So we didn't quite fill that gap, which again is surprising. Typically gaps like to fill. And once we tested, once we got into the gap, I should say, we ended up basically selling off for the rest of the day. So I'll show you what that looked like. So here was our open. Again, as I mentioned, we rose up, and then after that we had this doji type candle and pretty much went down the entire day. There was a little bit of reprieve in the noontime to 2 o'clock hour, and then we continued on down for the day. So things are starting to turn a little bit bearish in my opinion, not necessarily in the long term, but in the short term. And what I'm looking at here, so this is a new warning zone that I've drawn. This is actually a support zone, not a resistance zone. This is based on the move from the high of today to the low of 3.2, which is this leg right here. So first of all, I do believe that this gap can fill. You see that gets us into our support zone. The high of this candle on the 8th is 274.24. So that will be my bearish target, 274.24. So what I'm looking for in the markets tomorrow, and yes, we have our AEMA and we typically bounce off of that as we saw here, but I'm expecting to at least come back and test this gap, fill this gap, and it's possible that we could push through even further. So taking a look back at the daily, I was watching to get out of my call because I wanted to get out when the gap filled. Again, we didn't actually fill that gap. We closed below the low of the day, so I ended up closing my position around here. I closed that position for a positive 79% gain, so not too bad on that particular play. We'll get into my other positions in a bit, but when I saw that we closed below this low, I was getting a bit concerned, and that also triggered me to get out of some other positions as well. So again, we'll go over that shortly. I just want to talk a little bit more about the market here. Now, there is the chance that we can come down and hit the AEMA and go up higher. I just have a sneaking suspicion that we will fill this gap at the very least. So some other targets would be this 270 level here. That's obviously below our support zone, but that's feasible. Our 100 is feasible, and that's why I don't necessarily think we're going to just kind of roll over and, I highly doubt we'll push below 264. I mean, certainly that is possible, but there is a lot of support here. Again, we have our exponential moving averages, we have this support zone, we have our 100, we have this support level here at 270. So there's certainly some areas here that can kind of catch us if we do start to sell off. Now, if we do close below this 265 level, then I think we're in trouble, and there's there'll be some bullish sentiment in the market. But I'm not convinced that we're at that point yet. So again, very short term, as in tomorrow, I think we'll fill this gap and potentially bounce and be back on our merry way, hopefully. But there is still the chance that we could revisit this support area, maybe test this 270 level, maybe even come down to the 100, or worst case this 265 level. So certainly some things to watch out for here. I would be very cautious if you are still bullish, if you have a short-term perspective like I do. If you're a long-term, you probably don't have much to worry about, in my opinion, unless things take a turn. If we close below our low of 2.9, then I would certainly be concerned medium and long term, as well as short. But in my mind, that's a long way off. So let's see what happens tomorrow. Let's see if we fill this gap, and then we'll see, what the market decides to do after that point. If it does that, I mean, we could have some futures be up overnight, open around here and just take off. I don't know. I can't definitively say what the market is going to do. I don't think that's likely, but you never know. So again, looking for this gap to fill sometime tomorrow or Thursday. Let's take a look at the Qs. Again, the Qs are still in better shape than the SPY. We had a bearish engulfing candle today, meaning the body of this candle was bigger than the entire candle from yesterday. This is a bearish pattern. Whether it plays out or not is yet to be seen, but we did bounce pretty much at our breakout level here, which is a bullish sign that we bounced here. The bearish sign is that this pattern, can potentially play out, obviously bearishly. So there is a chance that we could pull back. If I draw our support zone based on this move, assuming this is the top from today's high to this move here, our support zone is in that area. Now you can see that there is a gap also on the Q, so I wouldn't be surprised if the SPY fills that the Qs also fill. Now it's possible we could come down, touch that gap, and bounce intraday and keep on going. So, volume was pretty strong on this move. We are still bullish on MACD, although it's starting to roll over. Now you can see we rolled over here. We came down and tested the 55 and then bounced. So MACD hadn't crossed over yet. But there is still a chance that we could roll over, given this bearish candle here, this bearish pattern potentially, we could continue to roll over and come back down and test the support zone here that haven't drawn it yet, but let me draw it for you. We could come down and test this support zone. 55 is a likely stop. If you kind of line up support, there's support here. With this bunch of candles in this mid to late February time frame, so that could act as support at 164. Certainly support here on 3-2. The low there is 161, so about 162. So, certainly there's some opportunity for the Qs to pull back some more. Whether we bounce off of the AEMA or bounce off of this gap fill is yet to be seen, but I do see the gap getting filled sometime today or tomorrow or Thursday. Just my opinion. It doesn't have to happen, but that's kind of what I'm looking at. So, taking a look at my holdings, I did get into some SPY puts at the end of the day. I didn't like the market action, and again, since I'm talking about this gap fill, that's why I bought those puts. I will close them when if the gap fills, I will close those SPY puts. Let me actually look at the SPY instead of having the Qs chart up. So I'm looking at this fill here, 272.42. Sell out of those calls. Sell out of those puts at that level, and see if we get a bounce. So I am still long in some positions. I am long still in JPM and MasterCard, and I also bought some First Solar today. So let's take a look at those. Show you what I'm still in long. MasterCard is still looking pretty healthy. We got a bounce off of the AEMA. We did touch our target again. Well, we were above our target, but I sold out back here on the 9th. So really I'm looking at 190 to sell out of my second call for profit. But if we close below the low of the candle on the 9th, or even today, which I think are pretty close to the same, but basically if we close below the AEMA, I'll be looking to get out of this position on MasterCard, take a loss on one of those calls. But I had a profit on this one, so it's not the greatest trade, but not awful as well either. So we'll keep an eye on what happens with MasterCard. Looking at JP Morgan, closed just above the AEMA, not looking very strong here. MACD was kind of bullish, and looks like it's turning over again, so I'm not too confident in JP Morgan at this time, given the price action on the last 2 days. I do think there's potential for it to roll over. Not saying it will necessarily, but it could. So in JP Morgan, if you give me a second, I am down 16% on that trade. MasterCard, on that one remaining call, I'm up 8%. And let's take a look at First Solar. Another position that I'm in. So we pushed above this resistance area here. I guess that's not really the resistance zone. So that these fibs that I drew, this would have coincided with, oh no, it would be a resistance zone. So we kind of fell back into it, but we are still above the AEMA. I bought long-term calls on First Solar. I'm currently down 15% on my position. The AEMA to me will serve as support. We didn't come crashing down today. Volume was pretty low. MACD is still bullish. And First Solar tends to operate outside of whatever the market is doing. Not always, but we didn't see a cup and handle pattern in the market. So, I think there is still potential for First Solar to run up. Again, it kind of does its own thing. It doesn't necessarily move with the market. So I do think there's more upside to First Solar. Let's take a look at Apple. Apple I bought into today and ended up selling out because I did not like the price action as the overall market was selling off. So I bought into Apple. This was the open. We got a close, so I bought in here. We had this big ugly bearish candle, and that's ultimately where I sold my position. So took a small loss from here, 183 down to 180, 183. So about $1.20 loss on that particular trade. That was a 20% loss based on the options that I purchased. So not the greatest trade there. And if you look, it's interesting. This line is the breakout line. We actually dipped below it, tried to get back above it at the end of the day, but couldn't quite do it. So we essentially closed just below that breakout level. So I think there could be some downside on Apple if the overall market rolls over. It's been having a rather parabolic move, had a little pullback, moved up again, but it may have run out of steam. You can see the MACD is starting to roll over a little bit. It does have support in the exponential moving averages, so we'll see what happens. Even though it technically closed below this level, closing around it is still okay. So it may bounce tomorrow depending on what the overall markets do. So I'm out of this position. I don't plan on shorting it or anything, but certainly take some caution if you are still long in Apple, depending on what the overall market does tomorrow. Some other positions. So a couple more here. Let's look at Microsoft. That was also another rough day, rough trade. So I got in on this candle here on the 9th. I was up a little bit yesterday and early today. We ended up closing or moving below the low of this candle, so I exited my trade down for 27% loss on that particular trade. Very disappointing with Microsoft's price action considering that it broke out. Activision had another bearish day. We are still above the 8 exponential moving averages, but as you can see, it looks like they're starting to roll. MACD is starting to roll, stochastics are rolling. Although volume wasn't super strong, I ended up getting out of my position for an 8% gain. And, could we bounce tomorrow? Certainly. It depends probably what the overall markets do. But, given that we were selling off today, the last couple days, I decided to take profit in that particular position. And Intel, that's the last one that I was holding. You can see we had quite a move early in the day. We were pushing high and then the market rolled over. Intel kind of fell with it. MACD looks like it's trying to roll over. I did close out of my position here for a 43% gain when we broached this first target. I'm still holding a call because we are still above the AEMA, but again, it's looking a little dicey, so to speak. It looks like there could be some rollover here. It's not as parabolic as what Apple was over the last month or two, but it certainly looks like it could be out of steam and may roll over. So I'm certainly going to keep an eye on it, see what happens. Depends what the overall market does. So that's it for my positions. So right now, to recap, what I'm holding are a couple of SPY puts where I'm expecting that gap to fill tomorrow or Thursday. I still have one Intel call. I have one MasterCard call. I have a couple of JP Morgan calls, and I have a couple of First Solar calls. So overall, my positions are still long because my perspective is still long medium term, but again, short term, I bought those puts to kind of offset any potential downside that I might see if the market continues down tomorrow. So we'll see what happens. A couple of trade setups for tomorrow. NVDA. This would be one if the market rallies. You'd want to get in if we break above our breakout zone here of 250 essentially. We were above it earlier in the day, but again, NVIDIA couldn't hold, sold off kind of like the rest of the market did. MACD is not looking too strong. It's kind of neutral right now. Stokes are bullish, but getting into the overbought territory. RSI is looking a little bearish. So not too clear on a direction here for NVIDIA. If we do get a nice close above this breakout zone, that might give us some insight into which way we want to go. But I do think it'll move with the overall market. So you just want to be careful if we do start to roll over in the market that NVIDIA could follow. So again, this is something that you'd want to get into at the end of the trading day, assuming that we're close to a close, last 5 or 10 minutes above this breakout zone. Another couple trades. These are short potential trades. Disney's kind of been in a funk. We had a highs here. We kind of had a triangle type pattern that we broke out of here on January 30th. This was kind of the down trend that happened with most stocks in the overall market. We kind of came back up here, put in a lower high. We have kind of a double bottom here, but then this big black candle, and you can see Disney's had a couple of big black candles that have followed each other. So we had a down candle, followed by another down candle, another big black candle, followed by another down candle. So I wouldn't be surprised if Disney comes down and tests this 101 area in the next few days. So potentially, short opportunity here in Disney, at least down to 101.35, perhaps even lower if the markets roll over. So something to keep in mind there if you are interested in a short position. A couple other potential short trades. Dollar Tree. So the reason I'm looking at this short, we've been putting in some pretty ugly candlesticks as we've been going up. This one was pretty nice, but we touched our AEMA. We didn't even get into our resistance zone here on this move from here to here. So there is, and let me get rid of this yellow line, it's not applicable anymore. So certainly there's this gap that it would be nice if it filled, but I don't foresee that happening in a bearish market, or a bearish move, I should say. I wouldn't say that the market is bearish, but short term, if we pull back, we might see Dollar Tree come back and put in a double bottom here at this 87.05 level. So everything's looking pretty bearish on the indicators. Volume was pretty strong, which tells me that we tried to have a higher move today, and sellers came in and knocked us back down. So this would be a 5-minute trade tomorrow to potentially get in short on Dollar Tree and see if we come back down to the 87 level here that was at the low of this candle on the 7th. And one more potential bearish setup, IWM. Now I typically wouldn't short at this point. I would just let the market roll over, but considering everything is looking weak right now, the SPY is looking weak, the Qs are looking weak. If the SPYs do roll over, IWM has a tendency to kind of roll over as well. Now we have put in a low here, a high, a lower high, and a higher high. So there's the potential. I guess we should redraw the fibs to see where our support zone is, so we know where we would want to trade down to. So if you were to take this short tomorrow, because we are at resistance, we tried to break through today but failed early in the day, and then we pretty much sold off. So we'd be looking at support levels here. Certainly the EMA can act as support, but if you look at stochastics, they are overbought. The volume wasn't super strong today. MACD is still bullish, but it looks like it's trying to roll. RSI is looking like it's trying to roll. So you could play a short down to 155, about a $3 move here, depending on if the markets themselves decide to roll over, and that coincides with this recent high on 227. So good target here, 155 if you did want to play IWM short. Certainly we'd have to get through this support level before we would want to get into any larger positions. And again, I'm not expecting the market to really roll over medium term to long term. This is just in the short term this week, just trying to protect positions and try and make some extra gains based on what the market is doing, what the market is giving us. So that wraps it up for today. Hopefully you all did a little bit better in the market than I did, and hopefully tomorrow's a better day for all of us. If you have any questions or comments, please feel free to leave them. Otherwise, thanks for watching and have a great night.